All righty, welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We're bringing it to you 26 years now. I'm Harvey Freed. To the right of me, Harry Glantz.
Good morning, Harvey. Good morning, everybody. I'm glad to be here. I'm looking forward to talking about the real estate market, but more importantly, the impact of what I'm reading in the paper, which is false, by the way. Higher interest rates could stick around. We're going to talk about what are higher interest rates and what is really happening in the market.
All great stuff. Mortgage and real estate for 1 hour. Of course, from the office, Lisa Lawson. Good morning, Lisa.
Morning, everybody.
Bringing this fine gentleman, Antonio Wells from Anthony Djon Luxury Real Estate. I know all those people over there. How you doing, Antonio?
I'm doing great. I'm glad to be back.
I can never dress up to your standards here on a Saturday morning. Of course, on radio, we don't. I look like, well, I don't look as good as you. Let's just go there. That's never going to happen. But we'll take your calls here live in the studio. 248-539-9797. As Harry said, interest rate conversation, inventory conversation,
Harry,
all of the above.
I'm just shaking my head. I'm glad Lisa's here today and Antonio and you're here because we're going to talk about this. Higher interest rates could stick around. Now, maybe my interpretation of higher interest rates are 8, 9, 10, 11, 12%. Rates right now, everybody out there, just so everybody knows, they're in the mid sixes. Mm-hmm. All right. I want to tell you, historically, mid sixes, that's low. All right. Now, if you're hearkening back to the COVID era where you got an interest rate of 3 or 4%, it's never going to happen again. We have to stop publishing that 6.5 is a high interest rate. All right, because there is still a very high demand for housing. The interest rates are not high. What you're seeing, and Antonio and I he acknowledged it before we even went on the air. What's going on right now, there are too many buyers for the amount of houses that are on the market. So it's not a high interest rate problem, Antonio. It's a low marketable inventory problem right now.
Yes, I agree. There's only so many turnkey homes out there, but there's a lot of non-turnkey homes out there. So all the buyers are fighting over the turnkey homes, which is why you're getting multiple offers out in this market today.
So we're still seeing, Lisa and Harvey, we're still seeing multiple offers, bidding wars, going over listed prices. We're seeing that. And it's not, if the interest rates were really high, you wouldn't be seeing that. No, it's a demand issue. Okay, the demand is high and the supply is low. And the interest rates are really good. They're good. So let's put that to bed.
The great agents out there that have been coming on our show have said, yeah, inventory's up. But it's a lot of the old inventory that's been sitting around a while, or homes that were listed. Maybe you guys picked up a dead listing and you put it back on the market. Now, it's a hard job. I always feel for that part of the job when you really have to convince somebody, look, they always want to say, hey, but the house down the street sold for X. But you don't have the house down the street. You haven't done those improvements to it. Those are really tough conversations. And you got to get, if you're a seller, you got to get real serious with your agent and make sure you're setting up the plan to sell the house. If that's your goal, is to sell it, get the top dollar for it, but you got to take that advice from the agent.
Yeah, I agree. A lot of times sellers, they look at the Zillow estimate. Well, Zillow, they didn't walk through your house like the realtor is going to do. So once the realtor walks through your home and assesses the things that you do have in the home, that's when you guys can come together and agree on a price to market the property.
But isn't Zillow equally flawed? It's equally flawed low. It's equally flawed high.
Oh, yeah.
Yep.
It's a barometer. It's just a baseline number. It's not an actual what you can sell your house for, because the market dictates what you're going to sell your house for in every area. So Zillow, to me, is equally flawed. It's equally flawed high. It's equally flawed low.
It's a tool. And sometimes, I mean, it's really a tool, but
it's a tool. Yeah, it's a tool in that vernacular.
Exactly. Exactly. So, I tell people, if you're watching Zillow, you might be able to see a trend. It might be a little bit higher, might be a little lower, but, it's definitely not accurate information.
No, it's the only way you're going to know is if you put your house on the market and you see what people are walking through and willing to make a bid on.
You need an agent to pull actual comps for you, homes that actually sold that are similar to yours, meaning same type of condition, same type of improvements. That is when you know what your home is worth.
Yeah, and then the appraisers are going to come in and they're going to do a sales comparable appraisal on what other homes in your market, in your area, in your subject area sold for within the last 6 months. That's the best indicator. And one thing that we're going to talk about might be controversial. You don't predict and you don't calculate what the home's value is by the square footage of the house. That is a mistake. It's a misnomer. It's a misrepresentation. You can't do it that way. It's an indicator, but it's not based solely on square footage.
100%. So if your neighbor's home sold for $150 a square foot and yours is 200 square feet bigger, does that equate to 150 times 200? Now that's what it's buying as worth. No, that is 100% not how it works. But people think that. They get a lot of misinformation. And so we get these calls all the time saying, my appraisal came in low. What can you do to fix it? Well, we didn't do the appraisal. Those are independent people that have no relation to us as a lender for a reason. Right. We don't want influence on value, and sometimes, people make mistakes and there are things that we can get corrected, but that's very uncommon. Usually people just don't want to hear their home is worth what it's worth, unfortunately.
Well, they're emotionally tied to it. An appraiser is not emotionally tied to it. A realtor is not emotionally tied to it. And I know Mike Tomchek, he's applauding me for saying there are other factors right now that, there's functional obsolescence. Mm-hmm. There's what kind of improvements people made to the house. We always say it, the brick pavers in the backyard might look nice, but they might not add value like some other things that will add value to the house. So, shout out to Mike Tomchek at Paramount Appraisals, if you're listening, Mike.
People don't understand the difference between value and marketability. So someone will be like, oh, but my house is just freshly painted. Isn't that worth money? No, because when you buy a home, you expect to have paint on the walls. That's an expectation. Now, it will make it more marketable if it's a neutral color that might be in style right now and it was freshly done, but it doesn't increase the value. And there's a difference between value and marketability. And I think people get that confused a lot when they're talking about their home and the things that they've done.
We see that a lot with the roof. Okay,
all
roof's
the time,
an expensive thing. Well, what could be $7,000? It could be $15,000, $20,000. It's not going to be a dollar for dollar. We expect there to be a solid roof on the property. Right. Again, with that in mind, check all of your inspections. Make sure you understand what you're buying, because the insurance companies have reached out to us and they keep telling me, as I spoke to a lot of insurance agents most recently, are telling me, Harvey, we're doing these inspections, and one of the things we're finding is these older roofs, and that's going to drive up the cost of your insurance policy. Plus,
and sometimes that happens after closing.
Yes, they'll come back out and they'll say, wait a minute here, we've got an increase.
Right. And people call and they get all upset with us and like, we have a shortage. And I'll be like, look, when we make those calls to the insurance agent and you say, hey, this is the house I want to buy, and they give you some numbers, they usually should be telling you within 30 days they're going to be doing kind of a drive-by inspection, make sure there's, no issues that they can kind of see. And sometimes these insurance companies come back and say, hey, look, we could tell from the road that the roof is XYZ, and we have to do either a deeper inspection, or you're going to need a different kind of insurance, or that roof will have to be replaced. And people kind of freak out, but that, you have to have some structural soundness there. And those are all things that sometimes happen after a closing. All
right, you're listening to the Hardcore Mortgage Real Estate Business Show. We take your calls all morning long at 248-539-9797. Pending home sales rose in May. We'll talk about some of the great stuff out there, reflecting a late spring buying season. It's been a good spring again. Summer's just kicking off. Is it today? It's today, isn't it? Or is it yesterday?
I think it was.
The longest day was Friday. I don't know. It's either today, Friday or today is the beginning of summer. So, everything up until now has been the spring buying season. Antonio, it's been busy. It's been great. And the numbers are telling us that contract signings increased 3.8% month to month, and then 4.8%, almost 5% more action out there on the streets, more homes sold. And I'm feeling like I had a nice spring, and I want to keep this rhythm going here. How about you?
Oh, yes, I do. I mean, it feels like more than 5% when you look at it.
Okay. Yeah. Your office is always busy. I always see the numbers out there. You brought some great information for summer discussion, topics that really work all year round, but specifically in the summer. What buyers should know before attending summer open houses. And I like that one a lot. So again, buyers are out there. They got to be prepared to really make offers in today's market, which could be really competitive on these nicer homes.
Yes, I agree. Step one, you need to educate yourself of what the budget that is that you want to use when you make your home purchase. Once you get out there and take a look at the homes, the styles that you want, you got to find out how much you're comfortable with paying with that monthly payment, and then the extra costs that are tied in to that mortgage cost, like earnest money deposits, appraisal guarantees, to get that competitive offer and win that house.
Seen some gorgeous properties hitting the marketplace. And again, there's more and more out there. But I got one at the end of my street that I know failed inspection. So watch out for those lake communities. Foundation issues were
what happened? Why did it fail?
You know what? I didn't find out all the things, but I had a friend go through the house and check it out. He said, there's serious foundation issues. It almost felt like the floors were tilting and stuff. So again, decide what you're thinking about purchasing, your price range, and look at all the inventory and understand what you're looking at. So sure enough, I knew it failed a couple inspections, but they put out brand new mulch out there, so it definitely looks better.
Looks pretty.
It's not gonna
the mulch discussion.
Yeah, so we're gonna go ahead. So there are some homes out there that look nice, Antonio, but they're dressed up the old putting perfume on a pig, that kind of thing, where things have been done to look really well, but you got to take it a step further in your inspection and your knowledge as a homeowner, or bring a builder, bring a construction person with you, bring an inspector with you to the open house. Why not? If you can, if you're hiring them after the fact, you might have to waive or do a pass-fail inspection. Bringing an inspector with you, or someone has some knowledge, or getting that knowledge. I love that idea.
Yes, I do too. So an inspector with your due diligence period, hopefully you get 5 days, depending on how competitive that home is. And once you do have that inspection, you want to make sure everything in the home is exactly to what you're able to do and comprehend. Once you're able to do that, then you can go forward and make a transaction.
Well, we always said it is the single largest decision and financial decision investment that you're going to make in your life.
Which is why you need to prepare.
Why not bring an expert in there to have just take a look? I mean, you always need another set of eyes, maybe another 2 sets of eyes to go over some things. You know, the biggest strength that somebody has is not knowing something and bringing people in that do know something.
Especially in a competitive market. You know, people are like, it's competitive. Yes, there are some areas that have softened a little and you think you have time, but not everywhere. There's areas that are still getting multiple offers that first weekend, and you can't sit there and him and haw, because by the time you decide, oh, all right, we're going to make an offer, they're like, sorry, we've already accepted one. You know, you have to be prepared. And part of that is hiring inspectors, maybe having the inspector with you at the open house. These are all the things that you can do to make sure that you are putting yourself in the best position possible to win the bid that, you know, the offer that you've made, and that they're going to accept that on your behalf.
You could call who your inspector is going to be. You can call them ahead of time and say, what are the things you're going to do? Can you show me an outline of the things you're going to check if I hire you after I get an offer accepted? And then when you're at the open house, again, you haven't even made your offer yet. You have that additional knowledge. You can be your own home inspector, the real estate agent.
Like a preview.
A preview.
Right.
Again, you're not necessarily an inspector. You might not have the qualifications, but you might have enough knowledge, and your real estate agent should have that knowledge also, where they can point out things. You can check out the age of furnaces, hot water heaters, the maintenance. How about the AC unit? Come over to my house. It looks like we need a new AC unit. I'm telling you, that's for sure.
Check out that foundation.
All right, 8:12 here in the Motor City. We'll talk a little Tigers. Why not? There'll be sports after our show, but for now, 248-539-9797. It's the Hardcore Mortgage Real Estate Business Show. We want to hear from you. Give us a call. Hey, we're back live. 817 if you're just joining us. It's a hardcore mortgage real estate business show brought to you by Capital Mortgage Funding. We're powered by CMG Home Loans at MLS 1820, the equal housing lender. Call us at 1-800-LOW-RATE, the best mortgage banker. Again, we offer all the down payment assistance programs. And I just took a transaction, which is fantastic. The Mr. program, the client doesn't need the $10,000. They're going to get the lower interest rate, which is subsidized by the federal government. The Mr. program, Michigan State Housing Development Program, it's 5 3/4 right now. So it's a great interest rate, and there's money available. If you're thinking about getting approved for a mortgage, deal with the experts at Capital Mortgage Funding. And we always take your calls here, at least 248-539-9797. Of course, Antonio Wells joins us. Antonio, always here to talk mortgage and real estate. Let's roll off to our first call this morning. Dave, you've got a question. It said tax question about maybe mortgages and real estate. Go ahead, Dave.
Good morning. Yeah, I wanted to find out. I recently, 2 years ago, I did a foreclosure, not a foreclosure, but a good deal on a Clinton Township house, and I flipped it, and everything went pretty good. I used my house as equity, which didn't bode well for my significant other. It was a great deal, went through, made some money on it, but it wasn't, the smooth transition. I felt I could wait longer, make a few more bucks. It didn't work out as well as I wanted to. Now we got the tax foreclosures coming up here at the end of the summer. My question to you are there ways that I could borrow money for the auction, because most of these houses are going to be cash up front, without using my home? And do you do that? Or do you have recommendations?
A home equity line of credit, of course, would be the lien on your existing house, and then that would free up the money that you could use to make offers, cash offers. But short-term financing, I don't really know anyone who does that, because there's no benefit for them to, for example, they're going to let you borrow $150,000, $200,000, Harry, and then
so you're looking for an unsecured personal loan or something of that nature. The only way that I could tell, if you have a business banking relationship with an institution or a credit union, but the real way to do it is the way you did it before. So you have to take a home equity loan. That'll be cash, and then you go ahead, you go to the foreclosure sale, and you buy it for cash.
Yeah, the house is paid off, and it's worth quite a bit. But the problem is, my significant other on that,
you heard that
property doesn't really want to do it.
Okay.
So, is there, the fact that I'd be paying this loan back, isn't there like a high interest rate that you guys recommend where I could keep it, for 6 months, a year to move this, to get into these auctions? Or you're saying there really isn't nothing?
Not without collateral, not without putting something up as collateral that somebody's going to want to give you that money for a short term to secure themselves.
Or a hard money loan would be in such a high interest rate that would even be a worse bet for you. You said
you're going to want to secure it through the real estate.
Right.
Correct.
Yeah.
And they usually want 50% up front.
Dave, you did it before. This is interesting. I like the conversation. Dave, when you did it before, what did you net from the sale of your first transaction? You dove into the market. You said, "Hey, honey, we're gonna buy a property." What did you end up netting?
Well, total, I think I went after a $250 sale. I ended up going for $221 because I was under the gun to close this off. Now, mind you, I had it for a year, and I fell in love with the home. And I completely renovated it from head to toe. I probably made about $1 an hour when I figured it out.
Right.
Okay. But I'm here to tell you. But I probably walked away to answer your question for maybe $35,000.
Oh, that's not bad. Hey, right? That's not.
That's
number.
almost $3,000 a month of income.
But I was there
and over a course of a year. You said it took them a year.
Yeah. But honestly, I was there every day, and it was like my second home working on it. It was almost like a hobby for me there in that session. I did not want to go that route again, and I had one friend who did buy 2 foreclosures, a bank, I guess you call them bank tax delinquent homes, condos. And he did good on them. Obviously he did go to the auction, and it was a live auction on the county steps. And did very well on those a few years back. I think now it mostly is online bidding. But that's my issue. I wanted to see if you could recommend anywhere where this money is available without a lien. And the answer sounds like it's no.
Yeah, I don't think so.
And not unless you can secure a very large personal loan.
Yeah, if any of our listeners out there know something like that, call in and let us know. But in our experience, I don't think anybody's going to lend you that kind of money without some kind of security.
Dave, thanks for the call this morning. We got
Appreciate
your number,
it.
so we'll follow up. Yeah, maybe if we know somebody throughout the week or someone will give us a call.
Yeah.
We take emails throughout the week, too. You can always email us. Harry, what email are we using for the show now? It's the...
You use your personal email.
Oh, you can
use
just email us. You can go hfreed at cmghomeloans.com. Fair enough. And if you ever send us a question, we'll always look for some professionals. Lise, yes, a lot of successful families out there, individual, small businesses have flipped homes and made a ton of money on them. But then there's this bad stories out there where they were at the house every day. They didn't make money on the property. So there's good and bad
Sounds
stories.
like he enjoyed that process.
You liked it. He got away from
It
his
sounds
wife.
like his significant other did enjoy all the time he was spending away. It sounds like that really is the underlying issue. But he sounded like he enjoyed the process. And
I wasn't going to go there because this isn't the mortgage, real estate, and divorce show. But that's what you have to do.
Right.
People take money out of their existing homes. You got a free and clear house.
Yeah.
Of course, you have to check with your significant other and say, "Hey, hon,
Right.
I'm going to take out $100,000 on our $400,000 house.
Right, are you going to
It's
do a
free
home
and
equity
clear,
line?
and
Yeah.
we're going to go ahead and we're going to buy this property and we're going to flip it." And they have to be all in, or else it's not going to work. And it sounds like he's realized that, he's understanding of that. But we'll check it out for him. I don't know of anybody that's going to give an unsecured loan.
No. I mean, like I said, a personal loan, but you'd have to have, unless he's buying very small houses, it's probably not going to work out.
Call a friend or a relative.
Right.
Maybe that's a mistake too.
I mean, you can always borrow against your own savings. Like Lord knows what he's got. He's made money
401k.
before, 401k,
Yeah,
possibly,
you can do
because you
that.
could pay yourself back.
Antonio,
Another idea.
real estate is contagious in a weird way. Like families go up north. Now they all want to buy a house up north. This is coming up. It's going to be happening soon, July 4th weekend. Usually we get the calls, "Hey, I'm up there right now, Harvey, and I see something. Can I get pre-approved real quick?" But also house flippers. Yeah, hey, my buddy made a lot of money flipping a house. There's a lot of successful stories out there. But again, we always talk about that education and confidence. And you need the support of your family members if you're going to lean your house.
Yeah, sometimes you live and you learn.
Right.
Yeah. You've had some good success stories about this with some family members or clients that you've worked with?
Oh, yeah, of course. I've had people that, even bought on the Detroit Land Bank, or they bought a house that had a good deal because maybe people didn't want to put the money in for the cosmetics, and they turned around and flipped it, especially in the early 2022 when the rates went back up and then the prices went up, so they made a good profit.
You mentioned Detroit, that Detroit Land Bank situation. Yeah, they're selling homes for $1,000, for $5,000.
Yeah.
I've had some good calls, and I've had some really bad calls where, again, someone bought it and they just don't have the money to fix up the house, and things aren't working out for them. So you once in a while do get that good call that it was very, very profitable. Not a lot of stress and everything, but there are professionals out there that know how to do it the right way. And we mentioned earlier, you're out there buying these homes. Our clients are out there buying these homes. So who bought it? Who did the work on it? Were they licensed contractors? Were permits pulled properly? And all these other things start falling into real estate.
Or if
Lisa.
somebody wants to buy one, sometimes that home has been neglected. I have somebody who wants to buy a home that's on a tax foreclosure, meaning they got it on foreclosure, not because of a mortgage, because the home was free and clear, but they didn't have the ability to even keep up property taxes and insurance on this home. There was so much deferred maintenance. I mean, there was literally like a hole leaking in the roof and they couldn't even afford to fix it. So we have water damage, roof damage. And people want to buy these homes because they're still a good deal if you could put just a little bit of TLC in. And we have loans that do that. We have renovation loans that can help people. So it's not like they have to have the money on the side for the fixes. Like, it's not like you have to have the money for the down payment plus the 40, 50, 60 grand or whatever it took to fix the home. We can use a renovation loan to do that. And you don't have to have perfect credit for that either. The FHA has a 203K renovation loan. You can. There's conventional renovation options. So, if you're not going to be shy about getting, a little bit of time invested, right, and having a little work done, there's definitely a program that's going to fit somebody's need.
I'm glad you brought that up. The homes that are left on the market, Antonio, we know that they're not the desirable ones. Otherwise,
That's
they'd be off the
perfect to
market.
use these types of
most
loans.
desirable. Most desirable.
Oh, I'm sorry, the most
They're still
desirable one, excuse me.
Right.
They're still desirable enough.
Yeah. You'll know within the first 10 days on market how desirable your home is. The market will tell you.
Right, because you'll either get offers or you won't. That's true.
So now the FHA 203K creeps in, and you're thinking, wait a minute here. I have first-time home buyers. They can borrow the $25,000 to $50,000 to put the new roof on the house because it won't pass the way it is, or the new HVAC systems, or whatever it is, flooring, and all the things you want to do to fix up a home.
And it doesn't always have to be things that have to be done. People don't realize you can use those loans to get things you want done. So yes, maybe this home needs a roof, right? And maybe it needs a new furnace. Maybe the furnace went kaput. And we can do a renovation loan to get those things. But you know what? Why not gut the kitchen and make it the kitchen of your dreams at the same time? You can do all that within one loan. You have one loan payment. You're not getting like a regular purchase and then a second home equity. This is all done within the same transaction. It's one closing for these types of loans. So there's something out there for everybody, especially for the homes that are sitting on the market, like you said.
Yeah.
So true that if you haven't gotten an offer or any activity in 10 days, you either need to really relook at your price, right? You know, I mean, especially in this type of market. And this is an opportunity for homes that maybe have been sitting there 30 days, already had one price reduction, they're really not moving. You might be able to go in and even get it for a little less and make it the exact home you want it to be as a home buyer.
Yeah. If you're getting a lot of traffic and no offers, that indicates it's priced too high.
Correct.
Okay. If you're getting no traffic, it's undesirable.
Correct.
Less desirable.
Less desirable.
Undesirable.
Less desirable. So yeah, the market always dictates,
Correct.
and it's no matter what anybody says.
All right.
The market will dictate.
We're up against our second break. Keep it here on 97.1 The Ticket, 248-539-9797. If you're a first-time home buyer, what you need to know when we come back. All righty, 8:31. It's the Hardcore Mortgage Real Estate Business Show. Again, brought to you by Capital Mortgage Fund. That's where you can find us all week long. 1-800-LOW-RATE, the best mortgage banker. 26 years here doing this mortgage real estate gig. It's sports after us, so keep it here. I see Stoney out there with Brendan. They got lots to share with you. Tigers with a little bloop double. Kerry Carpenter last night. Kerry, if you're driving in, they all listen to the show, so that's cool. Hey, swing the bat out there, Harry. We love baseball.
Love baseball, and they had a sellout crowd.
That's what I'm saying here.
So
Let's
Skubal
go.
was on the mound.
Yep.
All right, gave up an early home run. Then we came back 2-1, ended up winning 4-3. Listen, nothing better than being at the ballpark during a victory on a Friday night.
Yes. I got a couple ball games here this afternoon, just baseball all around the vibes here in Detroit, especially with the nicer weather here. Hopefully we'll stay away from the rain today. And I think the game is a 1:00 game today. They don't have many night games down there on Saturday. So keep it here on 97.1 The Ticket. Dan Dickerson and the team, they'll be giving you some great baseball. We got another 30 so minutes here, just a little less, about mortgages and real estate. Antonio Wells, of course, joins us here. Antonio, always talking who you're working with and some of the buyers out there. And you even mentioned, again, not that we want to hear, but there are a lot of cash buyers out there, which makes it even more difficult because the sellers automatically think that, hey, he's a cash buyer. That's an easier transaction than the family getting a mortgage. I know it's not true. And I always feel that they're missing on the due diligence, Lisa. One of the things, there are some cash buyers. Then they find out they bought a house that has liens on it or something gets pretty ugly quickly.
Well, recently in the past handful of months here, being a cash buyer wasn't quite as fast of a transaction as it could be because there's now new requirements where even the title companies still have to source your funds like a mortgage company has to source your funds. By law now, it used to not be that way, right? You just wire the funds, you could close in a week, whatever. That's not the case. So title companies have now been tasked with the due diligence of sourcing these funds. All these anti-money laundering federal laws still apply to them.
Right.
And nobody was really doing it that way before.
You mean, Lisa, I just can't walk in with a paper bag of $200,000 in cash and drop it on the title company desk? I can't do that?
I know. People say cash all the time. They're like, I'm just bringing cash, right? And I was like, no, you actually don't physically bring actual real cash.
Not cash from the safe.
Right. It's like all done through wires and everything is verified. And so, having your quick, I can get closed in a handful of days.
It's not true.
Is not true anymore. And that, really just kind of changed in the past handful of months here. So I really hope that people understand, as a seller especially, you might have a cash offer. And maybe there's one with a mortgage.
But it's really the terminology. And
correct.
I'm glad Antonio's here. But it's the terminology. If you bring a cash offer, all right, automatically that sounds great. The however is you still have the inspection period, which somebody could back out, like you could do during a mortgage. All right, normally it's going to take 2.5 weeks anyways.
Correct. Now, yep.
And what ends up happening is that whether it's a cash offer or a mortgage, it's still going to take the same amount of time. And sometimes the people that are making the cash offer have already applied for the mortgage. So instead of bringing the cash to the table, they're going to bring the mortgage cash to the table. Mm-hmm. So it works out the same. I mean, it's really I would say the verbiage is, it sounds good, but it might not be as good as everybody thinks. It just sounds better than a regular offer.
Right.
If my realtor partners and friends are out there disagree with me, please call. But because it takes the same amount of time, you're not going to close in a week. First of all, you can't close in a week.
Not anymore.
Okay? Right. You can't do it. You might close in 8 days, but you can't close in 7 days. So there are laws, there are rules, there are regulations that we have to go by. And like Lisa said, the title companies now have to source where that quote-unquote cash is coming from.
Correct. And that's a newer regulation. So my whole thing is if you're representing, as a seller and you want to accept an offer, I'm hoping your agents are explaining it's really the bottom line. Yes, cash sounds good, but who cares if it takes 3 more days to close a loan if you can net $5,000 more?
Yeah, as a seller, you have to have your own due diligence period as well and review the offers thoroughly.
And review these offers. And I think people just get so excited the minute they hear cash that it kind of is like cash blinders, right? Like all of a sudden they're not paying attention. But I was like, I just went through this with one of my own clients who was selling a home using the proceeds and they want quote unquote fast. And I said, yes, but if you took the other offer you had, in this case, you would have $12,000 more. That's
a lot.
$12,000 more. And I said,
difference.
who cares if it's taking 3 extra days? You're not closing. We will do simultaneous. We can close a loan in the morning and buy your house in the afternoon. You don't need to have a whole bunch of time in between. Why would you not take the extra $12,000? And so it's making sure that you understand the process, that you understand all the moving parts, understanding the timing, and doing what's best for you as the buyer or seller, whichever side of the transaction you are in that moment, to make sure that you're netting the most money. And that is not always cash. That's a misnomer.
I'm not telling you to invest your money in the market. I'm just suggesting that the stock market's done so well. Having your money in the market has done so well for most families over the last couple of years. To take a big chunk of funds out of that, it's probably not making sense for you. So you took less for your house, you took a cash offer, and now you're not making money on that. And then you're also taking your own funds out of your account. You're not making money. Now your money's not invested anymore. Anyways, we got some great stuff for you here. And if you want to join the show, 248-539-9797. I teased it with first-time home buyers, what you need to know. And one of the things, Lisa, I want to talk about in Antonio, focus on your monthly payment, not just the interest rate, because that's a significant part. Understand where your comfort zone is and what your plan is. And again, a lot of young people, I have some young guys, hey, Harry, I'm going to buy this house. I'm going to rent a room out to my buddy. Okay, use that calculation. Talk to your friends if you're out there thinking about buying a house. So one of the things is stop focusing on interest rate. That you can always change. And try to figure out the monthly payment because, Harry, as you know, you got association fees, property taxes, insurance, all the other.
Yeah, you have to lock up the house, all right? You quit focusing on the rate. You don't have the house yet. In order to get the rate, you have to have the house first. So don't put the cart before the horse. Put the house before the rate. You like that one, Harry?
Yeah.
Put the house before the rate. Lock up the house before and do your due diligence. And knowledge is power. We've said that. You've heard that your whole life. You don't know what you don't know. You have to ask around. You have to build your team. So you have to have a great realtor. You have to have a great financial person. You should have some kind of tax preparer, CPA, accountant looking after your finances for you. All right? And you need those people, and good legal representation never hurts. So you have all these people on your team, and you're building your team so you can make the best decisions for yourself.
Correct.
Anthony, one of the other things, so number one is we said don't focus on the interest rate, and then Harry clarified that up. How about second, don't wait for the perfect market. It really never exists. Antonio, let's talk about that a little bit. It's pretty close to a perfect market now. If you've got the money, you've got the credit, you're approved, let's consider home ownership.
Yes, I agree. Right now we have, they may not be the most desirable homes, but we have more inventory than we had in the previous 5 years. I would say that you need to focus on the location where you want to stay. And then that mortgage payment, make sure that you can afford it because your debt to income ratio plays a huge factor in what your monthly payment will be.
Write down these 3 or 4 must-haves, right? And then you get your boxes there. So you got 3 or 4 must-haves. You got maybe it's listed all the way down to 10. Now you're checking off the boxes, Lisa. And if you could check enough boxes, that's probably the home that's going to work for your needs.
Absolutely. People have this idea where the home doesn't have X or home doesn't have Y, and I'm going to keep looking. And there's a lot of time. You can look for a very long time. Nobody says that you can't. But you have to always kind of keep in the back of your head that this might check 90% of the boxes, but you can always make adjustments, right? You can always revise the home. You can always maybe add another addition, or maybe you want a different kind of kitchen, or you can take out a peninsula in a kitchen and make it more open floor plan. There's so many things that you can do to make something your own, and so really, I want people to start looking at those what people call less desirable homes, right? Things that haven't been updated, because you can make that 100% what you want for yourself and get it at a better deal, really.
Much better deal.
Antonio hit on it. Working with first-time home buyers, the numbers that I'm getting in the boxes, everybody wants to check boxes, the area they want to live in, the number of bedrooms, because they're going to have a family.
Yes.
The number of bathrooms, so they're not cramped. Does it have a yard, right? Does it have a backyard? And then they go from there. You can always fix up the kitchen. And last but certainly not least for storage, does it have a basement? All right, am I going to fix up the basement, or am I going to use it for storage? What am I going to use? So usually the area is number one: bedrooms, bathrooms, backyard, and a basement.
And then throw in, again, let's keep going with those boxes here. Now you got someone who says, you know what, I'm not shoveling that snow off my car anymore. And I live in, so I need a garage. So again, lots of different things out there, amenities that you can look for, but location always stands out. And I think that's never changed in real estate.
No.
One thing for sure is your clients are focused. I got to be in this area. There you go. Maybe look at the city next to you, Antonio. That's one of the things we've told people. Look, stretch it out a little bit. Again, it's not a moving condition. It's not the exact city. Now let's move over a city over. Will this work for you? And is the house going to check enough of these boxes?
Yeah, I agree. Because a lot of times, let's say my buyer's looking in Rochester. I'm like, well, a lot of my other clients, they're looking at maybe Avondale or maybe Troy. So just spread out, especially if you've been looking for a while. If you're looking for over 3 months, just make sure that you're looking at all the boxes and all the houses that are surrounding the areas too. I
had clients that were looking in Sterling Heights for a long time, had to have Sterling Heights. And I said, well, you just check out Macomb. I live in Macomb. I promise you it's good. Not only did they love Macomb, bought a house in Macomb, the millage rate was less, the taxes were less than what they were looking at. And Sterling Heights has low taxes, don't get me wrong. But sometimes just taking that one step and opening it just a little bit can make a huge difference. you know.
You don't know what you don't know.
Right.
All right, we take your calls here, 8:41 in the morning, 248-539-9797. It's a Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. Give us a call, 1-800-LOW-RATE. We'd love to help you get that strong approval letter. Antonio Wells, top real estate agent. He's in the office. He's in the studio with us here.
Happy to be
here. And when we come back, we'll talk a little more buying that next house for you. All righty, welcome back, Detroit. It's the Hardcore Mortgage Real Estate Business Show around Southeast Michigan. We bring you a mortgage real estate talk if you're thinking about buying a home. If you need a great real estate agent, call us at the office. We'll give you a couple numbers. I like that interview process. Hey, if you want to interview us, again, 1-800-LOW-RATE, the best mortgage banker. We give you great advice. We have all the programs, Lise, and we're doing a little touching here on some first-time home buyer things to look out for. But let's just touch on, again, the down payment assistance program. We offer them all, and I think there's some great opportunities out there. And like I told you earlier in the show, my client doesn't need the money, but he's taking the subsidized MSHDA program. The rate's 5 3/4. It's unbelievable.
Yeah, absolutely. So if people qualify for it, MSHDA often has down payment assistance, but there's a subset of that where you can get no down payment assistance, meaning you'll bring all your own funds to closing, and the rate is only 5 3/4. It's a no-brainer to me. If people qualify for that, they should absolutely be looking into it. I mean, that's just, you can't get 5 3/4 without buying down the rate right now anywhere. So why wouldn't you take advantage of that opportunity if you qualify.
Always love when the real estate agents call us and say, Harvey, I got you. Call this person. We need them to get pre-approved and make sure that they're a strong buyer ready to go. And so often I call and they don't have their credit in order or they have zero money to work with. And even on the down payment assistance programs, you still need some money to work with because of there's property taxes. When you start adding the components of home ownership, you might need, let's just say on the low side, $2,000, $2,500, more towards $2,500 to $10,000. That's probably the wheelhouse, and you got to have some money saved up to buy a house. Come on.
So down payment assistance will give you, like for the state of Michigan, up to $10,000. But people who are looking at a $250,000 home, that might cover the down payment, but it's not covering closing costs, setting up your escrow account, paying for your homeowner's insurance, paying you the underwriters, paying for title work, any of it. So you still need funds to close. Even if you're buying a home on the very low end of the sales price spectrum and you can get the down payment assistance to cover almost everything, the program itself requires you to make a 1% investment at minimum of your own funds. So, even if it's a $100,000 house, you have to still put in, no matter what, at least $1,000 in that scenario. And concessions can help. You can get a combination. I've had people who get MSHDA and concessions, where the seller is covering a couple thousand here. I mean, there's always ways to structure it. I don't want people to get discouraged and think, oh my gosh, I don't have 10 grand. I can't buy a house. There's, between down payment assistance programs and seller concessions and everything else, other ways to. I would tell you that
everybody talks about the affordability of housing because they just look at the price of the house. Correct. Right? You should be able to come up with $1,000, $2,000, $3,000. I know that sounds like a lot of money, but relative to getting in the market and buying a house, it's very low. Anybody out there will tell you that's a very low barrier of entry to get into buying a house.
You can't get an apartment for that.
Exactly right. You still have to come up with that kind of money
last month,
anyway.
Security deposit. So whether you're coming up with that or money to get into your own home.
And wouldn't you want to be in your own home for that?
I would think so.
Okay. And the equity that you build, I mean, it's a great investment.
I always like when we bring up that point. Right. If you rent a house, you want to get in the rental and you're going to rent a house, you got a dog, your apartment's not going to work for you, you got a couple kids, you want to be in that school district. Usually the first month rent, let's call it $2,000 rent. That's a for sure. And then 1 month secure, you're at $4,000. Yeah. And you got to go pick up your renter's insurance policy. You get another $500, $600 for that. Things can add up quickly. You could become a homeowner. And that's what we do the show for. Is we love working with that first-time home buyer. I couldn't make it happen, and now you're giving hugs at the closing table. At least that's why we do this. It's still fun for us and exciting, and I know the real estate agents love that part of it too.
Oh, yeah. Is why I do it.
Nothing like showing up to a closing with a lot of smiling faces.
Right? I mean, I love giving people the opportunity, especially when they think they can't. And explaining, yes, we can, and this is how we're going to do it. And it might be a couple steps, and it might seem a little bit overwhelming, but that's what we're here for.
And it might take a little bit of time.
Right.
And, Lisa, the credit queen of our office, I mean, we might have to repair people's credit.
My favorite thing.
By the way, no charge.
Correct.
Don't write anybody a check or give a credit card number for $500.
Or pay for some monthly service.
Yeah, don't do that. Give us a call. We can take care of that for you. And then 6 months down the road, we'll help you buy that house, because all it takes is maybe another 50, 100 points in your credit score. Get it up there. You'll get a favorable rate, and we can put you in a house.
All right, here, you mentioned it early in the show, so we'll go back to it again. Everyone likes to talk about interest rates. If you don't know some other components of home ownership, interest rates is always the first one on your mind. So easy to talk about. Kevin Warsh is the new Federal Reserve Chairman.
Yeah.
He had their first meeting on Wednesday. No changes with the Fed funds rate here. Yeah. Maybe some mention of, could these rates even burp up a little bit? I don't want to hear that. I want to refinance clients this winter.
Yeah, first of all, nobody is going to tell you, everybody's going to tell you that they think they know what's going to happen with rates. I'm going to tell you that if somebody tells you they know what's going to happen with rates, and you should run away from them. That's number one. Number two is that what's going to happen is that there's probably going to be very little or no change between now or the end of the year. So if you can go ahead and project the fact that rates are going to stay in the mid sixes, plan for it. And if rates happen to go down next year, there are a lot of factors that go into this. I don't see the new chairman of the Federal Reserve raising rates. I don't see it. They're talking about inflation. They're trying to stick to this 2% number as a rise of inflation. People are spending money. It's more like 3.2%.
Right.
If they want to raise it to 2.75 or 3% in terms of what their barometer is, maybe. But I don't see them raising rates. I can't see that. I don't see them lowering rates. So what does that really mean?
Status
My
quo.
projection is it's gonna fluctuate between 6.5, 6 5/8, maybe 6 3/8, 6 3/4. But that's the range that we're in now. So in all that boring, drawn out talk, really should not prevent you from going and shopping for a
Right.
house, because things will not change markedly with interest rates through the end of the year.
We have a call coming in, and let's roll out to Dave calling in from Farmington Hills. Hey, Dave, welcome to the show. Go ahead.
Hi, guys. Great job. This is very entertaining listening to you guys in the morning.
I appreciate that. Thank
you're
you.
you're talking about cash sales, and I was wondering, you can pre-qualify for a mortgage. Can you pre-qualify to prove that you've got a bunch of money? Say I've got in my brokerage account or
Yes.
a savings account, I've
Yes.
got $500,000.
Yes. It's called a proof of funds letter, and you can absolutely do that. So then you can be a cash buyer, and you walk around with your proof of funds letter, and you give it to your agent, and then now they know, right? Ask
Okay.
the agent,
The
Mr.
seller
We
would
do
Antonio.
love to
that
see
all the
that.
time.
Yeah.
Yeah, we
Yep.
do it all the time.
Yes, you absolutely can.
So I guess the point is if you wanted to close in a couple of days, is that an option, to speed that process up, or are you still talking at 7 or 8 days that
You're
you have to wait before you can close?
So the title companies still have to source the funds from, like, say, for example, you said your brokerage account. That process of sourcing those funds still has to happen. Instead of being done by a mortgage company like myself now, it's going to get done by the title company, which you'd be used for closing even on a cash transaction. So
again,
it's
Lisa,
still going to be about a week and a half.
Right. They simply ask for typically 2 months bank statements to verify
Yeah.
that you've had the funds in there. But again, now you have an opportunity to get that title insurance and check to make sure there's no additional liens on the property,
Yeah.
no old water bills, things of that nature.
Right, but it still has to be
To me,
sourced.
more
So-
important than proving the funds.
Which can be, right?
It can
exactly
be
right.
sometimes, yeah.
You don't want to buy a house that has a lot of liens on it, and that is a
Or
a
not clear
caution.
title. I have somebody right now whose title isn't clear. There was a break in the chain after somebody passed away. It wasn't properly passed down, and it's in a trust, so it doesn't have to go to probate, but it's not clear. So these are the things that title will help fix.
You want title to take the time to do that.
Correct.
Yeah.
It's very important. Otherwise, somebody else could be like, you bought my house and you don't own it anymore, and they can take it back from you. And that's not cool.
Dave, thanks for joining the show. We appreciate it. You got anything else, or should we let you go?
No, thank you very much. It's entertaining talking to you. Listen to you guys. Thank you very much.
We appreciate
Thanks,
that.
Dave.
Thank you so
Appreciate
much.
that.
All right. Happy Father's Day to all the fathers out there, too. We're coming up to the end of the show here, and we got a Father's Day tomorrow. A lot of hardworking guys here across the country. Specifically, I care about our blue collar and our white collar workers here, and everyone who's busting their tail to make ends meet. Again, the cost of things have gone up, so it's been a little bit of stressful for a lot of families across the country. But things, as Harry's mentioned, things are still relatively affordable. Housing is extremely affordable here in Michigan, and there's always opportunity out there. So, Antonio, a couple things here you had on your list here. Some of the biggest mistakes sellers are making. I just want you to hit that real quick to tell some of the people out there that are listing their homes. You brought it up. What mistakes are sellers making in 2026?
I would say overpricing their home and not marketing their home to the best of their ability.
Okay, so those two things out there. If you're not getting a lot of foot
Yeah.
traffic on your house, you're priced too high. That one real estate agent who keeps telling you that you've had confidence in them, you listed it with them. Listen to your real estate agents and find out what you can do to get the house marketed in
I have a question.
Open it up.
Is it smarter to list it at a competitive price? Because this is what I think happens. I think sellers want top dollar. So they're like, well, I'll take, we're use round numbers, 300, but I want to list it at 325 and see what happens. Or I want to list it at 309 to see what happens. Is it smarter to list it where you think it's actually going to sell at to make it, or even maybe a tiny bit less? Or are people listing it with a little high with their fingers crossed? Is that the smarter plan?
It's smarter to list it at market value or
Right.
slightly below market value, because more people will see that $299 house and they'll submit those offers for $220
Versus a 309.
$325, yeah,
Or
and then
whatever.
to get
Yeah,
the
and it'll
house.
start
Okay.
driving the price up.
And it'll
Yeah.
drive the price
Yeah.
up, and it'll end up selling for where it really is worth anyway, right? Okay, that's what I thought. I just wanted to make sure.
All right, we are coming against the
think
end of the
people
show.
do
We're
that
going
all
to
the
keep it
time.
here. Metro Detroit community has definitely been embracing real estate. A lot of opportunities out there. Again, our city's been flourishing downtown. There's so many opportunities out there. Get a qualified agent on your team. We always say that if you need somebody, we'll definitely forward a couple names and numbers to you. You can meet agents and find out what the differences are. Same with lenders. And that's what we
Yeah.
always stress. Make sure you're dealing with people that give you the confidence. And I think that it's just a word out there, but it's the strongest word, I think, in real estate. You're going to sign your name. You're a first-time home buyer. Maybe it's your next house and you're overspending on the house. Get that confidence behind you. And I think that's what a great agent and great lenders do.
100%. You know, they should be able to answer your questions, and if they can't answer them right off the bat, they have the sources to get the right answer for you and come back with that. You know, you have to have great communication.
Yeah, don't be afraid to reach out, ask a lot of questions, gather that knowledge, and then make the right decision for you.
Correct.
Alrighty, I'm going to tease next week's show. We actually are bringing in some stagers. That's right. There's a company out there in Metro Detroit. That's where all the realtors call to get the staging done on these houses to make them look nice. So if your house isn't moving, make sure you tune in next Saturday as we bring on the top staging company across Southeast and a great real estate agent too to follow. Again, for Antonio Wells, thanks for joining us.
Thanks for having me.
All right, we'll see you next week. For Lisa, Harry, I'm Harvey Free. We'll see you next Saturday.